Welcome to Financial Planning Explained. I'm your host, Mike Menninger, certified financial planner, owner and founder of Menninger and Associates Financial Planning. This is episode 2 with Brandon Thor, CEO of Thor Metals Group. And we're talking a lot about gold and how the whole thing works. The first episode, we talked about, the different ways of getting it and comparing bullion and comparing it to silver and everything else. But I want to really get into the weeds a little bit about actually buying gold. So let's say, for instance, I wanted to buy gold, and no, I don't want to buy the ETF. Interestingly enough, since I talked to you 2 weeks ago, amazingly, the following weekend, I bump into a buddy of mine who told me he has gold bullion. I'm like, cool. I want to see it. I've never seen it. I just think in my head, these gold bars that are about this big. And I'm thinking to myself, $3,000 an ounce? This gold bar must weigh a half a ton. I could only imagine that's $1 million. How in the world do I buy that? So I said, you got to show it to me. So he goes and he tells me it's about the size of a dog tag. I'm like, really? So he hands it to me. I'm like, hey, this is a cute little thing. But I'll tell you what, it felt like it weighed more than an ounce. But let me ask you a question. How do you verify, call it accuracy, legitimacy, whatever. How do you verify that it's real gold? I have an anecdote on that. I just thought about as I was telling you about this.
So Michael, I mean, you nailed about 5 things there in one question, which is, okay, so the authenticity of gold, and this really is why there's a different market for eagles and bars like we spoke about last episode, because, the eagle is made by the U.S. government. There's a lot of credibility there that's actually real gold. And the thing is that gold as an element is incredibly dense. And so when you're looking at an American eagle and you have the right circumference, right, whatever, if it weighs out correctly, then hey, that's going to be real gold. Now, with the bars, those are made by private manufacturers. They don't have that same credibility as the U.S. government, and you can manipulate the length or the width, and then you could put something like tungsten, which is also a heavy element in there, and weigh it out the same way. And so that's when they talk about like variability, like authenticity. That's what they're talking about. Is it real gold, or did somebody pump something else in there and gold plated or something like that? And you just have a lot more reliance there with the American eagle because, like I said, the U.S. government had a lot of credibility, and what it's going to look like, its circumference and the schematics. Whereas the bars, a lot of manufacturers, you don't have that same that same knowledge.
All right. Well, I'm gonna doubt you on that. Let me explain something. And I know we briefly talked about it on the phone. Back in the day, when my father was really the mentor when I became a coin dealer, and I remember that he had an opportunity to buy gold from a bank. And so what he did is he got the opportunity because my mother was a teller at the bank. So he literally got the gold home. Now you referenced tungsten, not arguing it. I don't know about it. I mean, I've heard of it, but lead was the element that they used because lead and gold were both very heavy and about the same. So how do you measure whether or not it was authentic? And he had it weigh, which is how you do it, is he weighed the gold. And by the way, this is why I'm saying, just because it's made by the government, these were all gold coins. So what he did is he weighed the coin, which is fine. Okay, and let's say it weighs 1 ounce. Fine. But what happens is that you have this gram scale that has a beaker where you literally weigh it underwater, which means that it takes the buoyancy and subtracts the buoyancy out and gives now a new value, which is able to differentiate between gold and gold-plated lead. And he found in this bag of gold, however many pieces, 50, 60 pieces, that there are 5 or 6 of them that were counterfeit, which makes me concerned ever about buying gold pieces, because the risk of them being for someone who is anything other than very sophisticated, it runs the risk of buying something counterfeit. So yeah, the government manufactured it, but so could some dude who decides to take and get the exact mold, which I got to imagine a metallurgic engineer could very simply drop this thing into a mold, then create the lead and just gold plate it, and it weighs exactly the same. It's not too hard to engineer. That's what concerns me about buying gold coins. But on the same token, I can buy bullion. How do I know it's not the same thing, that it's plated? And furthermore, how do I know it's 99.9 versus 98 or 95? Okay. So I kind of threw a lot of junk at you. Help me.
Okay, so I should be writing that down, but listen. So here's the thing: gold as an element. Let's just throw investing aside and let's talk like scientists. Okay, gold is incredibly dense, and it's one of the densest, if not the densest element on the planet. Now, tungsten and lead, like you mentioned, is very close behind. Okay, and so here's the deal. And this is why people have a lot better reliance on like an eagle or a maple leaf. And if you go to a pawn shop, they'll just put it in the mold and then give you money for an eagle or maple leaf. But with the bar, they have to do what's called an assay, which is a chemical test. Like you mentioned, one of them would be the underwater buoyancy. Now, here's the thing. It's because nobody's going to be able to find something denser than gold to fill that with. They can find something that's very, very close. So when you're constrained by the actual exact circumference and exact width of like a American eagle, which every pawn shop, everybody has a knowledge of what that is, and you put the thing on there, if it fits that and it weighs out correctly, then you're pretty sure that it's gold. Now with the bars, you don't have those same constraints. You can manipulate the length of it, the width of it, because there's all these manufacturers that make it and they make them different. And so then you can pump in something that's very close to gold as far as density, but not exact, and it will weigh out. And so that's why there's a lot more, I guess, credibility, so to speak, on the Eagles, and that's why the market price is a bit higher than the bar. It's not like there's collectible value; it's because literally it's a lot more difficult to counterfeit.
Okay, fair enough. So that raises a question: where do I buy gold that I can rely on it being authentic? For it being everything's 99.99?
Yeah, well, yeah, the Eagle, and again, let's not get off on a real tangent here, but the Eagle is actually 91.6%, but it weighs 1.08 troy ounces. So the gold content's the same as a 1 ounce, 99.9%, pure gold, like a maple leaf or a bar. It's just a bit more diluted by an alloy, like an amalgamation that hardens the gold. Because pure gold, that's why nothing's 100%. Pure gold bends. So that's why they put a little bit of an alloy in there. Yeah.
Right. Okay. Fair enough. But what about bullion? What's the percentage on that?
So bullion, and this is what we were talking about during the commercial, it's a major misconception. Everybody, guys that are very, high investing intellect like yourself to, just your commoner, bullion, people just think of bars. Okay. But bullion, what that means, it means that it's metal, that you're just buying the metal. There's no other variable like collectability that influences the price. So bullion is anything where you're just paying for the weight, the purity, the quality, and then the liquidity demand market. So it can be a coin or a bar. The difference between coins and bars are that bars are made by private manufacturers and coins are made by government mints. Okay, that's the difference there. But of course, then you can also have your collectible coins, which is like made by a government mint in 1812 or 1910. So then that's the third category that we discussed last episode.
Well, it's kind of interesting. But again, how do I verify the legitimacy of a gold bar and bullion that I buy?
Sure. And I'm going to date myself because everything's online now, but you remember like Foot Locker? If you went into a Foot Locker and you bought a Nike cross trainer, hey, you knew it was a Nike cross trainer. Same with gold. If you're buying from a reliable dealer that's been around, then you have a good reliance that they're selling you real gold. But also, we as DT dealers, Thor Metals Group, or the competitors of Thor Metals Group, we acquire it on the wholesale market. Now, my business model is I only acquire from United States mint listed dealers, which mean or wholesalers, excuse me, which means that these are the 9 companies that the United States Mint has, nominated to distribute the Eagle to the investing community. And so there's no break in the chain of custody when you acquire the metal from, Thor Metals Group, whereas other wholesalers, they very well could be selling you gold that, they bought back and then resold to a dealer. There's all these things that can occur. So you can have some good credibility there.
So do you provide, when you sell gold to a customer, let's say I pick up the phone, hey, Brandon, I want to buy a gold bar. I think about baseball cards. They have this little documentation of authenticity. Do you provide that as well?
Yeah, absolutely. And now that's only, again, that's going to be on the bars. It's called a certificate of Assay, ASSAY. And yeah, if you're going to buy bars, then you get them assayed. We're going to send you a certificate of Assay with the coins because, and again, there is an ability to counterfeit. I'm not saying it's impossible, but because it's so much more difficult to, then with those, you just send those in tubes or whatever. In as long as it has the Lady Liberty and it's made by the United States Mint, or it has the leaf and made by the Canadian Mint, then people rely on just that. They don't need the certificate of Assay there.
Interesting. Okay. Now, you see, and I'm trying to be very careful with how I present this. I see commercials on TV about buying gold and in a gold IRA. Now, this much I do know from our world is you can buy real estate inside an IRA, but it needs to be a certain type of custodian. I think the same applies to a gold IRA. And let me tell you something. So, and then you can share with me, but I had a client come to me and said, here's my statement. And they had owned it for more than 10 years. They bought it for $10,000 and it is now worth $8,000. And I look back, I'm like, well, wait a minute. Me, of course, I immediately go to the chart and say, why did yours go from 10,000 to I think it was 7,800 when gold appreciated 70%? You lost half your value. Why?
Okay. If you saw me frantically looking, it was for a pen so I could structure my response. So here's the deal. So the golden IRA, by the way, talking about authenticity, the IRA provides a lot of nice safeguards because the IRA system is, you owe, if it's a traditional, you owe, tax money to Uncle Sam, you have to store it at a IRA approved depository. And when it's received there, it's x-rayed, it's ultrasounded, there's a white glove test. So for a fact that that's going to be authentic. So that's a really nice safeguard to have in place. But here's what you're talking about. Okay. The reason why there's going to be a difference in value when you see a statement versus, what the actual value of the gold is simply because unlike a stock where you can buy a share of Nike stock at JP Morgan or a share of Nike stock at Morgan Stanley, and they're not going to charge you $100 at JP Morgan and $60 at Morgan Stanley. A share of Nike stock trades for a very standardized price. Now, gold, you can see it, at dealer X for, certain amount of dollars. We sell it for a certain amount of dollars. So there's a variance, like real estate. And so it creates an issue where do we peg the price for purposes of reporting to the IRS? And so what the IRS allows the custodian to do is to report everything at what's known as the spot value, which we talked about last episode, which is just that future contract, that standardized price. Now, here's what I'll say though. Okay. A lot of what you see though are half truths because yes, the statement will read lower and that's actually an advantage because if you take the gold out, then your 1099 is only just going to read that spot value. Whereas you might have, something like an Eagle, which is above that. Right. But the problem is a lot of companies in my industry. I don't want to say that, it's everybody, but, there's a good amount of them that we play with that and they'll say, hey, look at, this is a really good advantage, but they're actually just overcharging for the gold. Now that's not an advantage when you overcharge for the gold and that creates that spread between what you see on the statement and, what you actually bought the gold for. But if that spread is just the difference between what that spot price, that future contract price is and the actual price of an Eagle, then hey, it's a nice tax treatment because, if you take possession of it or if you do a Roth conversion, then they're just going to 1099 you at the spot price, not at the market value. So to answer your question, and hopefully I didn't confuse it too much, it is a nice tax treatment if you're getting the right bullion and you're paying a fair price, because you're correct. There is a difference between what the custodian reports that and what the actual market value is, but you need to make sure that that difference is not because you overpaid for the gold.
I have a feeling that it was associated with two things: the overpaying for the gold and an annual storage fee. And what was doing is basically, in that case, they probably paid $10,000 for $8,000 worth of gold. And then every year they're getting chipped away at like $100 or $200 storage fee, where that adds up and that just chips away at the growth, which means that it almost strikes me. Not almost strikes me. It struck me in that particular instance that was a lousy investment. And it's not that the gold was a lousy investment, but how they did it was lousy.
And I'm going to try to make this as simple as possible, because you struck on why I started this company. I mean, I was a broker in this industry for a decade before I started Thor Metals Group, and I just could not sleep at night, towards the end of my tenure there, because it just, it felt very predatory. We took advantage of a lot of first-time investors that just didn't really understand, what the price of gold should be, what they should be paying. And like what you saw in that statement, I'm sure that client did overpay for the metal. But if you pay a fair price for the metal, then you have a lot of good advantages to owning the physical asset versus, let's say, GLD or something in the IRA, which is that storage fee you reference is flat. Okay. So let's say you have $1 million IRA and you put $1 million into gold, you're paying $100 a year flat for storage, and it's like $150 for a custodial fee. So let's call it $250 a year is what you're going to get invoiced by the custodian for that self-directed in the storage. So for that $1 million in gold, hey, you have a Lloyd's of London insurance policy, you have storage for it, you're don't worrying about getting held up at your house, and that's all for $250 a year. That's
right.
Way better than probably your AUM fee. But if you have $10,000, yeah, you're completely correct. That flat fee will definitely eat up into it. But here's what I will also argue: when you buy like a physical gold eagle, now you're getting exposure to the actual organic supply and demand market for gold. Now you're getting exposure to your average American wanting to get out of the dollar or wanting to get out of the stock market and protect their wealth in something that, is more conservative, something that they feel is more reliable. And now you're getting something that cannot be manipulated the same way as the spot price can. So like I mentioned that SVB Bank in the Silver Eagle example. So if you bought physical Silver Eagles and, that SVB Bank collapsed, well, guess what? You're liquidating that at $38 a 1 ounce Eagle, whereas the spot price of silver stayed at $26. So if you had SLV, hey, what are you doing? I mean, you're going to be, selling that for whatever the ratio is for the $26. But if you bought the physical Silver Eagles, you're getting all that appreciation on that physical market for the actual 1 ounce Silver Eagle, if that makes any sense.
It does. We're at a good point for a break, and we'll pick it up right where we left off. So stay tuned. We'll be right back with you.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Menninger, founder of Menninger & Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going, because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Plan and Explain as we wrap up the second episode with Brandon Thor, the CEO of Thor Metals, Thor's Metal Group. That's right. So now I want to really get into the weeds for executing, because quite honestly, I've been thinking about it, but really waiting, is I actually want to buy gold. All right. And what you're telling me is the price of an eagle is not that much greater than the bullion. And quite frankly, I love coins. All right. And if there's no huge numismatic value, I may personally go that route, but we'll cross that bridge. But got another question for you. Much like all things that the government produces in the form of currency, are they dated?
Yeah. People think that the eagle's been produced forever, but actually it's just been produced since 1981. So it's only been produced for what, 45 years. I guess that's a long time. God, I'm getting old. But yeah, they are just dating. So there's a 2018 eagle, 2022 eagle, and actually that matters if you're buying maple leaves, because in 2014 the Royal Canadian Mint introduced what's known as DNA technology, which is this invisible magnetic strip in all their gold maple leaves that just instantly authenticates it. There's this machine you slide under and it instantly authenticates. So everything post 2014 on the maple leaf side, there's a really nice demand market for because of that.
I would buy US and not Canada, just saying. So if I said to you that, and by the way, you just gave me the thought of it, is I may choose to buy a 1994 Eagle for my son who was born in 94 and a 1996 Eagle for my daughter who's born in 96 as a gift. Can I do that?
Yeah, and if somebody wants to do that, we would not necessarily be the best firm. I'm very helpful though. I will tell them who the firms are that they should go to, because the e-commerce firms. I'm not going to mention them specifically, but there's a couple good spots where you can get a good price. You can make sure you're getting that date. Now, if you want to put 50,000, 100,000, put an IRA into physical gold, then you're going to want to go through a dealer like Thor Metals Group. But if you're looking for something like that, then there's some places online that fill that void pretty good.
So what do you sell? Do you sell the coins as say the coins? I call them coins. The Eagles are coins. Okay, right? You call them coins. So you sell the coins and the bullion, correct?
Of course. Yeah. So we sell, look, if it's produced, we sell it. It's just, we're an investment firm. So if people are looking for, gold that was on a king's crown in 1815, we're not the right spot. But yeah, if you're want to buy like an eagle, a maple leaf, a bar, gold, silver, the weights, fractional weights, we sell all of that. But it's just the numismatic stuff. That's not our specialty, nor is, getting those specific dates and getting 2 or 3 coins, because we just don't have the manpower to accommodate something like that. We're very education driven. So, we want to make sure that our investors understand what they're doing, understand what they're acquiring, and understand, the market.
So on hand, how far back do you go on your coins? 25 for sure. 24, 23? What do you got in stock?
Look at if you, it's more the dollar amount that you're looking to invest, okay? Because like I said, we only have so much manpower, and we want to make sure we give a certain level of service to our investor. But as far as is going back with the years, if you meet our our firm minimum threshold, we'll do that for you. If you want to get a couple that are certain dates, we can just talk to our wholesaler. We have the mint listed wholesalers, so we can request, hey, can you do, a few 2016 Eagles or whatever. So we go as far back as they produce Eagles. We can get those specific years. It's more just a matter of, we would go out of business if we were, servicing those 3 coins, like Christmas gift type of deals, versus just people that want to put like an IRA or invest in the metal, because of fear, safety, or protection.
Do you do the IRAs yourselves, or do you have to find a custodian for that?
We have to find a custodian. So, and this is very important for people to understand, and this is confused a lot. People sometimes think that the dealer does the IRA, or that you see these, these gimmicks like free storage for life. Well, guess what? That just means that the dealer's making such a healthy commission that they can afford to pay your fees. But really, so when you do an IRA, you're going to set up what's known as a self-directed IRA. So that's just an IRA that allows you to own alternative or physical assets like real estate, gold, and silver.
Right.
Or, a group of companies. We like a company called Entrust. There's also, Gold Star. That's, the gold one. There's also ones that specialize in real estate. So you're going to set up that specific type of IRA. You're going to roll over your funds. That's a lateral transaction. So nothing's lost in that transition. It rolls into cash. And then if you want to invest in physical gold and silver, then we'll sell you the physical gold and silver. Now, of course, we have an IRA department. We'll help you set up the account, roll over the funds, because a lot of our business is selling gold and silver in an IRA, but we aren't going to be the custodian. We're not going to be the ones that, are holding your money or your metals. That's going to be your property. Once you buy it, it's yours, so.
Understood. You know what? And the reason why you'd be crazy if you didn't sell it to IRAs, because if you really get down to it, the bulk of people's assets are tied up in IRAs. Why? Because they've been contributing to their 401k all these years, but they don't have the excess cash. So that gives them the opportunity. So what is your minimum?
So our minimum is $10,000. So $10,000 and above will certainly accommodate. Now we want to make sure, because gold and silver, and I think we mentioned this in episode 1, is such a mysterious investment, even though it's been around forever. We want to make sure that everybody that comes through our door, our phone line, gets a certain level of education. We want an informed investor, and not an educated investor, just educated enough to make a deal, but we want an investor that's educated enough to understand the deal and be confident in it and know what they're doing. So, we're going to spend some time explaining the market, doing what me and you've done in these 2 episodes, and then we're going to walk them through the actual acquisition and put together the portfolio based on what their thoughts are.
Well, good. You know what? After we go offline, I have a whole lot of things that I want to do because I want to buy some myself. So I'm wrapping up here. Is there anything else that you want to add?
You covered some terrific, we covered a wide spectrum. We probably would need about 50 more episodes to really go over, everything with the metals market. But what I will add is just what I call my 10 commandments of buying physical gold and silver, but I'll trace it down to the most important 2, let's call it. So here's the thing. When you buy physical gold and silver, you have to go through a dealer like Thor Metals Group or one of my competitors. All right. Now, whoever you go through, you're going to just pay a market price for that eagle, that maple leaf, or whatever it is. So the things that you want to do are, you want to make sure that you're acquiring metal that it's widely recognized. It's a highly liquid, globally recognized, not something that's obscure that you can't find online, because that's a predatory firm taking advantage of your lack of knowledge, of the metals market. So make sure, if you're going to buy gold, that you buy something that you've heard of, that you can find everywhere. And then also, if it sounds too good to be true, it is. The $50,000 in free silver, that's not coming out of thin air. That means that you're paying, such a premium on the silver you're buying that they can afford to give you the $50,000. So there's no free lunch. Just, understand that.
Understood. So, Brandon, thank you very much for your time. What I'd like you to do, if you could, just take, 20 seconds and just tell the viewers how they may be able to get a hold of you. Give me your name, all that fun stuff.
Sure. So my name is Brandon Thor. I'm the CEO of Thor Metals Group. We have obviously a whole team of brokers and things. And the way that you can contact us is by our phone number, which is 844-944-THOR. Or you can go on our website, which is www.thormetalsgroup.com. And then if you want to speak with me specifically, you can go to www.buythorgold.com, and then you can set up an appointment with me. Those are generally, going to be a larger investor, because I'll take the time and block that out. But depending on what you're looking to do, then you can kind of navigate what option fits you the best.
Terrific. Brandon, thank you very much for your time, for doing these 2 episodes. I learned a lot, and I hope that my viewers learned a lot. And for those of you who joined us for both episodes, thank you very much, and I hope you learned something as well. And I look forward to seeing you next time on Financial Plan and Explain. Thank you. Thank you for watching this episode of Financial Planning Explained. We strive to provide an educational experience for all of our viewers, and what we struggle with at times is topics. So if there's an idea or a topic that you would like for us to discuss on a future episode, please email us at admin@maaplanning.com, or you may enter it on the Contact Us page on our website at www.maaplanning.com. Thank you in advance for participating and helping make our show successful.